At a 94 rupee per dollar, every SIP rupee that you are investing has to fight a 10% currency headwind. And at this rate, all your notional profits are being vaporized by the fact that we are importing inflation at record speeds. If you felt the ground shifting yesterday, you were not really imagining it. The fact that we are no longer in a market correction is real. We are actually in a global energy war. Good morning and welcome to the weekly analysis. And today's reality is that we are now trading in a world where the Strait of Trump decides your SIP return. While Tehran has agreed to a UN humanitarian corridor, the energy chokehold seems to be stronger. But to understand why your portfolio is bleeding today, we have to look past the local headlines and also analyze the new geopolitical reality. The US and Israel are staring at two choices: a humiliating retreat or a catastrophic escalation. And given their track record, they usually choose the crisis. So let's not discuss charts anymore. Let's discuss the probability and cost of another week of Middle Eastern violence. In the past week, we have been seeing a massive divergence globally. Wall Street had its worst week since the war began. But the European markets, or especially the European currencies like euro and pound, were actually showing some resilience. Why? Because the world is realizing that this is an asymmetric energy war. The Nifty surrendered 22,800. Yesterday, Nifty did not just drop 500 points, it bled out, closing at 22,819. We witnessed a 9 lakh crore wealth erosion in one single session. And the culprit were the PSU banks and the auto stocks. Why? Because these are the engines of a credit-fueled economy, and those engines are actually running on empty as of now. While the screen was red, the real casualty was the Indian rupee. It hit a record low of 94.83. For FY26, the rupee has depreciated by 9%. So when you buy an iPhone or even a bag of imported fertilizer, you are not just paying for the product, you are paying a war premium that the RBI is struggling to defend. This week, Goldman Sachs slashed India's 2026 GDP forecast from 7% down to 5.9%. They are not saying India is weak. They are saying that our 88% oil dependency makes us the most vulnerable nation in Asia to a prolonged Hormuz closure. So this warning proves what we have been discussing for over a month now. I've been calling out that buy the dip is not a strategy. IT is not a safe haven. I said that in December. And in this month, I have called out the market behavior correctly all throughout the month. How do I do this? I do this simply by reading out to you a market analysis every day at 4 a.m. So why don't you subscribe and listen to it? Because even if it saves you 100 rupees, think of it as the price you pay for clicking, right? So enough of marketing, let's come back to this topic. President Donald Trump has officially coined a new term. It's called the Strait of Trump. He is actually laughing in our faces. I think it should be called instead a Strait to Trump, as no one else is telling him the truth. On Truth Social, he announced a 10-day extension to his deadline. He has paused the destruction of Iranian energy plants until Monday, April 6th at 8 p.m. Eastern. He claims Tehran is begging for a deal, but in the same breath, he bragged about eliminating Iran's top leadership. Two different contexts in one simple sentence. That's what the state of mind of President Donald Trump or the US administration has been. Remember the peace news from March 25th that caused this big rally? It was a decoy. Yesterday, March 27th, 5,000 US Marines reached the state. So you don't send forcible entry specialists to sign a peace treaty. It was a 5-day halt to get hardware into position while the peace narrative kept oil from hitting $150 per barrel and crashing the global economy. This week is going to be a binary week. Between now and April 6th, the market will trade on rumors if a deal is struck. The rupee will bounce back to 90 overnight. But if Trump decides that the talks have failed, we are looking at Brent crude possibly testing $150 to $200 by June, as Macquarie strategists warned yesterday. And I'm tired of giving you this news, every Saturday that everything is bad. So is there some hope? So I'm glad to say that there is some hope and it is coming from the UN. Tehran has agreed to a UN-backed humanitarian corridor. For the first time in 30 days, non-hostile ships, those not associated with the US or Israel, might be allowed to carry food and fertilizers. This is why agrochemical and fertilizer stocks like Chambal and GNFC showed some relative strength yesterday. It's a tiny crack in the energy chokehold, but in this gloom, a tiny crack is where the light gets in. But even with this green shoot, don't mistake a crack for a wide open door. Don't start investing. The economic reality is that the gas for your kitchen is still stuck behind a blockade. On the screen, you can see 4 different metrics. Now let's discuss the most important part. What is our move for Monday? Do we buy the dip at 22,800 or wait for the April 6th fallout? Dosto, as of this morning, the data suggests that we are standing at a double bottom junction. So let's break that down. Technically, Nifty is hanging by a thread. Yesterday's close at 22,820 was a desperate attempt by DIIs to hold the line. If Monday opens with a gap down below 22,750, the dip buyers will vanish, and the next stop is a direct slide to 22,400. I request you, like I have for last 2 weeks, that don't be the exit liquidity for FIIs who dumped 10,000 crores yesterday. We are currently in a 10-day geopolitical limbo. Trump's new deadline is a double-edged sword. If you buy on Monday, then you're betting that by April 6th, Trump will announce a business deal and not a nuclear strike. At $112 Brent crude, the market has already priced in a limited war, but it has not priced in a full regional shutdown. But for those of you who think that you must buy, don't buy the domestic engines. Stay away from auto and banks for now. They are being crushed by the 94.83 rupee. Your move for Monday should be focused on IT and pharma. These sectors are your natural hedge because they earn in dollars. When the rupee falls, their margins rise. They are the only ones thriving in this Strait of Trump economy. But my personal take is don't be a hero. This is not a lump sum market. So if Nifty holds 22,800 in the first hour on Monday, start staggered buying in defensive sectors. But keep 50% of your dry powder, which is cash, ready for April 6th fallout. Information war में timing ही सब कुछ है. Subscribe and stay updated. My 4 AM pre-market analysis every day is a good sounding board. And by listening to it, if you are able to save even 100 rupees in one single trade, then clicking on subscribe on this channel is practically free for you. So stop being the liquidity for the big players. Watch the math and survive the day. And I will see you on Tuesday 4 AM before the bell rings. In a world of $120 oil, patience is the highest yielding asset of your portfolio. That is why you must stay factual and you must protect your capital. And let the fog of war clear before you go all in. That would be my final advice. So thank you for tuning in, all of you, on this Sunday afternoon, and have a great weekend, whatever is left of it. And I will see you again on Tuesday morning, 4 AM. Bye-bye.